at the stock of Broadcom go. This morning, this big-time maker of chips, networking equipment, and infrastructure software announced a major deal with OpenAI, and the stock shot up nearly 10% in response. This is just the latest in a string of big data center deals that make me real glad we own Broadcom for the charitable trust. Luckily, we're here in San Francisco, so I got a chance to speak with the one and only Hock Tan, the president and CEO of Broadcom, earlier today. Take a look. First, Hock, it's an honor to have you on the show in a very big day for your company.
Jim, thank you for saying that. It's a privilege to be here.
Oh, thank you. Now, one of the things that people, I'm going to dispel something immediately. There are a lot of people who make these criticisms about what's really going on here. I know you, as you say, I am not a cheerleader, as you said in the Goldman Sachs Communicopia conference recently. You're not a cheerleader. You're a hard-nosed businessman. You're not doing this because you hope something will happen. You're doing this out of necessity. It's needed.
Absolutely. There's a real hard business case for doing what we're doing, which is investing and enabling those select few customers that we chose to work with in enabling them to run their LLMs. And the biggest thing they're short of is compute capacity.
Now, one thing that did concern me is that to put in perspective how much power you need, you're talking about nearly 18 Hoover dams worth of power. Who's doing the back end for you? Who are making sure that the power is available? I know you wouldn't just stream it up.
No, and actually there is a lot of power out there, even in America.
There is.
There still is. It's just that you need time to get there. You know, there's available power. We hear a lot about it. But what's needed at the end of the day is usable power. And that comes, there's a lot of available power. We've seen that. We've seen the announcements that Oracle made on finding power and making deals with OpenAI. More quietly, I know for a fact people like Google, people like Meta, and Microsoft has access to available power. The key now is to make these sites usable. And a lot of it comes not just one big, we hear a lot of news about 1 gigawatt, 2 gigawatt. Sure. It's great to have that, but you don't need that for generative AI, especially in the case of inference. You want it distributed, so you can find lots of location on the power grid for 50 megawatts, 100 megahertz, 200 megawatts, and they're very available. Now, less and less so, no doubt, but with time, this becomes available and becomes usable power.
Right. I know, as always, you are thinking ahead about what will happen. I don't think people realize. People say, oh, they play this guessing game. Oh, is it going to be this company? Is it going to be that company? Maybe it's Anthropic. Maybe people should be looking at it differently. How many companies can do customized silicon on scale? How many would you work with? And always, you don't do anything where you sacrifice the margin for the shareholder.
Absolutely, Jim. And we've been thinking about it for a while now, and we've been learning, especially the learning experience for the last 7-8 years with Google, who is the first player we have engaged with on creating custom AI accelerators. And that was back 8 years now. And we still engage very deeply. And both of us learn as we progress during that 8-year journey. And what we have chosen to do is we look at the market, the players in it, and we chose to really address and select a group of players who are really creating super intelligence, I call it, or generative AI. Another way of putting it is these are the guys, the source of intelligence come from creating a better and better generation of models, foundation models called LLM. Now, you don't do LLMs, you're not in this game.
No, right now, no one else is in this game at this scale. You are. I am concerned. You've always been a purchase order outfit. In other words, no work until you get a purchase order, because you are a business person, not a dreamer. With this deal, we don't really know the economics with OpenAI, but I know you wouldn't go into a deal unless you're satisfied that they will work. OpenAI is a private company. Can you give us some assurance of what you see that makes it so that they're definitely worth working with?
Well, for one, Jim, I mean, they are one of those few players in the forefront of creating foundation models and best. I mean, they are private, but I think there's a sense of their choice of being private. But they are valued, the last valuation even as a private, over $500 billion. And their revenue is growing at a very strong rate. And so, as I said, the first step you want to look at this whole game is how real is generative AI.
Right.
I think that's where it begins. Okay. Then you look at the key players in it who are going to be there over the next 3-5 years. And these are the people we elect, and they select us too, to be fair, and we are privileged to be that way, where we invest in technology with those guys. And you say we're very hard-nosed business, and yes, we are. We look at it very hard, we calculate it, but that doesn't stop us from looking out 3 to 5 years and looking at this phenomenon, this wave called generative AI. And what it is trying to create intelligence through foundation models, which, by the way, in a lot of cases, is a bunch of equation algorithms on a whiteboard, which until more recently, a few years ago back, when the ChatGPT moment happened, where you're saying you can translate what is in theory on whiteboards into actual intelligence through models by creating compute capacity that can actually train, and create basically intelligence information through this whole process. So we believe then, we picked about 7 players today that we are working very closely with. And 4 of them are now real customers. And we define customers in a hard-nosed manner, you indicate, Jim, as those guys who have given us production purchase orders at scale.
Now, I have to believe that the others have the ability to give you a purchase order. It's just that I can't ask you to ask customers who haven't been finished yet. That's not fair. But your confidence in this narrow group of customers is incredibly high.
Yes, we feel very good about it because each of these guys need a lot of compute capacity for them to basically play in this game and eventually win in this game of creating the best foundation model in the world.
Right, I know you say, and from outside on hardware, compute capacity, to some extent, rubber hits the road on this. It's really incumbent on us to keep optimizing, pushing the envelope on leading edge technology. So you have to stay ahead of the other guys.
Well, to be honest with you, the main competitor we have is merchant silicon, because they were there first. Right. Outside of Google, they were there earlier.
I don't want to get a cage match between you and Jensen. That's not paying off.
He's a good friend.
I know. You are not necessarily a competitor. You keep saying you need many different partners to get this done, including companies you've competed with.
The market for compute capacity is large and growing much faster than any one of us can handle. Even though the path towards, for these few LLM players, they want to create a platform. You know, Charlie mentioned the trifecta.
Yes.
Of not just an accelerator for compute, AI accelerator, networking them together into a cluster, and the software stack that engages, that allows models to run on the chips. Essentially, you're trying to create a platform, because that platform, if you are a large enough player like a foundation model developer, is what's enabled you to generate the best performance per watt and best performance per dollar, both in two respects. So that's inevitable. But having said that, the journey towards that, while we're going through this wave, the requirements for capacity and compute as you deploy, as you push the envelope on foundation model, is more than doubling every year. So that's enough for all of us to participate, frankly.
Well, but that means that you're just trying to meet the demand that's already out there.
Yes.
Incredible. Now, one of the things that your company became a $1 trillion company based on VMware, by software, by non-AI. What are we doing with all these other parts that we kind of get for free, given what you're doing with AI?
Those parts are doing fine.
Right?
VMware we acquired 2 years ago is doing extremely good. It's throwing off huge amount of cash, free cash flow, while it's growing at the same time. It's a great asset. And I'm so pleased I bought it.
All right, now I'm never going to try to do the 25-26 game. I'm not doing a model, okay? But you do reference 2030 and how exciting it can be. So this is, I mean, I've known Hock Tan for many, many years. This is the most excited I've ever seen you about something.
Well, it is, we are in a wave, in a phenomenon, as I call it, I've never seen before. That it's not cyclical. It is, as you put it, Jim, secular.
Right, you're talking about railroads. You're talking about internet. You're talking about this. You're talking about the fourth industrial revolution.
I'm talking about critical utility for society. We're talking about generative AI. Now, I don't try to sound a bit hype, but you think about it logically. The GDP of globally is about 110 billion, give or take. 100 trillion, sorry, 110 trillion. Fully 30% of it is valued from industries related to knowledge-based technology intensive. And you put in generative AI, you create intelligence in a lot of other aspects of society. That 30%, say, will grow to 40% of all GDP. That's 10 trillion a year. Now, what's spent a year? That's growing.
Human intelligence is the biggest part of GDP. This augments human intelligence in a remarkable way. And for people who think that it's pie in the sky, goodbye to them.
I don't think it is, because if you're talking growing 10 trillion as the pot at the end, as the golden pot at the end of the rainbow, what's spending $1 trillion a year, which we are not there yet. But you see the return on investment is pretty good.
The return is very little. I want to thank Hock Tan, Broadcom President and CEO, on this very big day for your company. Thank you, sir.
Thanks to be here, Jim.
Coming up, Cramer's keeping the West Coast party going and catching up with the CEO of Levi Strauss, seeing if the stock is in fashion. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.